It's about that time of day again. My name is Joseph. Thursday evening, January the 18th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is range bound with a big old triangle pattern tonight, and that tells me to focus on failures, looking for buying opportunities using the 2-try rule down below the range low tomorrow morning. The S&P is bullish with a big spike in range pattern on the chart, and I'm watching the high of a bull flag to use in combination with the battle zone tomorrow morning. The Nasdaq is also bullish with a spike in range pattern, just like the S&P, and I can see a key reversal line down at 95.5. We're waiting to use that tomorrow morning. Gold is bearish with a big flag pattern. We talked about those 4 scenarios last night on the newsletter. Well, what we got was a flag pattern on gold today. That tells me to look for selling opportunities with that breakout pullback underneath the low of the channel tomorrow. So waiting for some traps on gold. And then, of course, the euro wrapping up tonight in the euro. The euro is bullish with a big spike in range pattern of its own, telling me to look for buying opportunities using traps down below the range tomorrow morning. But I got a great newsletter in store for you guys and gals tonight. Looking to wrap up this 3rd week of the month of January. It's been an incredible week. And of course, as always, I got a plan for you guys for Friday morning. Before we jump into the plan, though, I want to remind you, if you're on the YouTube channel right now, make sure you subscribe to that YouTube channel. That way you always get notified, right? Click the little bell icon there on YouTube to make sure you always get notified when I publish a new video. And if you really want to stay in tune with everything we do here at School of Trade, make sure you join our mailing list over here on the blog at sidewaysmarkets.com. Again, if you're on the YouTube channel right now, there's a link in the description of that YouTube video. Follow that link over here to sidewaysmarkets.com and make sure you join that mailing list, and I'll send you an email whenever we send out, right, one of our psychology lessons, right, one of our newsletter lessons, and anything else we do here at School of Trade. While you're here, don't forget, I'm always posting exclusive content, stuff you won't see anywhere else on my stock Twitter, Facebook, and LinkedIn profiles. So feel free to follow me on that social. Speaking of charts, just below the video here tonight, right where it says click here to download today's charts. You can have all the charts from tonight's video, have them on your computer for tomorrow, right where it says click here to download today's charts. Grab that link and get those charts ready for tomorrow. And speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room. I'll tell you right now, you're going to learn more on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you have any questions along the way, free trial, free pass, newsletter questions, psychology questions, membership questions, hit me up on the right-hand side of the website. We get a live support tool on our blog here at Sideways Markets and on the homepage at schooloftrade.com. All the links you need, by the way, are in the description of that YouTube video. So click away when you're watching the video. Let's jump right in. Tomorrow is a finally Friday session, kind of a shortened week here, right? Because of course Monday was a holiday. So of course, short week here, wrapping up tomorrow morning. Tomorrow's Friday, January the 19th. Before we take a look at tomorrow's news, do we have anything down here to worry about in the Asian session? Nope, not that I can see here. Nothing to worry about there in the overnight Asian session. Tomorrow, though, really not a lot of news on the calendar. As you can see, we get the retail sales in Great Britain. That's about all we have to work with tomorrow. Tomorrow is also OPEX tomorrow for all you Emini traders, so we may see some slowdown in volume as we get later in the morning, but that's pretty much standard. That's pretty much par for the course on a Friday morning anyway. So, you know, 3rd Friday of the month, we may see a little bit of a slowdown here. It's been a bit of a kind of a bumpy ride of the week here. We've had a great week so far, but it has been a little bit lower volume and a little bit rough around the edges. You may have noticed that with those wild swings we saw yesterday. So, you know, we'll see how tomorrow looks, but obviously no real major news. I don't expect that retail sales number to do much more than maybe move the cable around, you know, a little bit, you know, during that news number tomorrow. Don't forget, though, Friday morning, always early in, early out. Right? The later we get on Friday, the lower the volume gets, right, in the markets, and the bigger the risk taking gets for the traders who are around us. So I always tell my clients, make sure you give yourself a firm cutoff. 11 o'clock Eastern time is what I always look for on Friday mornings. Anything after 11 a.m. Eastern time, right, and really you're playing with fire. You're more than welcome to hold trades into the afternoon session on Friday, but I would highly encourage against trading the afternoon session on a Friday afternoon. Again, volume dries up and risk taking increases just because traders at the end of the week, they take bigger risks, right? They're trying to make up for losses. So be careful of that tomorrow afternoon. Again, 11 o'clock, so early in, early out. And don't forget, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time with all of our advanced members, and we're going to execute this strategy together. All right, let's jump right in. We got a bunch to cover here tonight. Got a couple really interesting charts here to look at as we get later on in the process. We got some easy setups on crude oil and the E-minis for tomorrow. And then we got some interesting stuff on the euro and gold, so make sure you stick around for that towards the end of the lesson tonight. First of all, starting off with crude oil here right now. Crude is range bound with a triangle pattern. That tells me to fade the breakouts, buy the low, sell the high, avoid the middle, and focus on failures with the goal of getting as far outside the range so we can get some good profit targets as we go back inside the range. As you can see here, if I zoom out on this chart a little bit here, if I get a there you go, right? We're coming all the way down off those highs, right? Off those highs here from earlier on in the week, right? So I got some long-term resistance coming in, drawing that trend line off that low, that midline, right? And you can see that midline here acting as support and resistance as well. So we're not making lower lows, but we're not making higher highs either, right? And we have a balanced market here as we go into tomorrow's session. Anytime we have a triangle, right, and triangles are a little bit different than just regular ranges, because basically what you're looking for on a triangle is I'm marking up the extremes here, right, the extreme high here, the extreme low here, right, marking up those edges, and basically that becomes my sell zone overhead. This becomes my buy zone right down below. I want to stay away from this middle, right, because what happens is you're going to have buyers buying off the low, right? You're going to have sellers selling off the high, and there tends to be a little bit of a what's the word? It's quite indecisive right in the middle, right? So I recommend staying away from right this range in the middle. Now, how do we play this, right? What's the best way to play this? Well, most important thing about a range is to get as far outside of that range possible. That way we have a bigger profit waiting for us as we go, right? In other words, I'd much rather be a buyer, let's say, down in the battle zone, right? Down around those swings. I'd much rather be a buyer way down here, right, than to be a buyer up here. There's just more profit potential, right? You're also going to have the opposite side of the market getting fooled, right, and thinking it's a breakout. Speaking of breakout, if we do get a strong run lower here, it's going to feel like a breakout. So just so you know, it's going to feel like this market's never going to stop going lower. That's just the way breakouts, right, seem to work. It's kind of the way the markets work. However, when we have that strong move down, right, we don't want to try to buy this strong breakout. We want to wait for those sellers who are undoubtedly going to be coming through and trying to sell the next pullback. The reason why you don't want to try to buy that first breakdown is because usually it's pretty strong. And whenever we have a real strong move in one direction, we expect them to retest that low. If not, go a little bit further through that low. So what I'm looking for here tomorrow, and this of course will be the same for the upside too, is that strong move down, get outside this range, right? It'll feel like it's never going to stop. And then what will happen is we'll go back to that moving average, right? We'll pull back off that low, and sellers are going to try to come in and they're going to try to whack it again, right? And that is what I'm hoping for. I'm hoping that these bears will give it a second attempt to go lower. Right? So I don't want to buy too early because my stop will be a sit and duck down here, right? And oftentimes we see two tries where that second try for those bears, it does make a pretty good run. But then we start getting those sellers drying up, and then we get the opportunity to make the run back up into that range. I'm going to be looking for that drying up, right? I'm looking for that slowdown for the bears, right? Continuing to see them try and struggle and then look for that opportunity, right, as we go back up, right, to retest the high. There's a few different ways, right? So that's the overall scenario I'm looking for, right? Same thing to the upside, right? We go up, strong move up. I'm not trying to sell that first attempt to go higher, because what's going to happen? Anytime we have a strong move, right, it's probably going to be tried again, right? Wait for that second try to fail, and then once we start seeing that second attempt, again, one try, two try, right? Once we start seeing it start to, right, to struggle here, then of course look at that sell right back down into that range. And as far as the exact entry triggers on it, I teach all the exact entry tools and techniques that we use in the advanced classes, right? So that's going to be a great kind of combination with this strategy. But, you know, we may also see something like this, right? We got this kind of this trend line coming down here, strong move down, one try, two try, right? Using that trend line as support, moving average, of course, right? Coming down. This gives us a failure. Let's do it this way, right? Failure into pullback, right? Failure into pullback, great opportunity there, right? So a couple different opportunities there, right? To try, right? Failure into pullback, and then back up, right? Back up we go. Again, be very careful, right? It's going to feel like it wants to go lower here, right? But remember, this market is sideways for a reason. Okay, if this market had a personality to the upside or downside, we wouldn't be seeing higher lows and lower highs right now. Now, how do we break out of a range, right? That second try, one try, two try, it will keep going, right? And you will feel the personality will shift, right? What will happen is it will go from being strength, pullback, and then no, right? It'll go from that feeling to strength, pullback, and usually what will happen is it'll retest that low, it'll sit, and then bam, right? It'll jump lower. And once we that jump lower, then we know something has changed, right? Something has changed. And in that situation, then take out your drawing tool, mark up that low, bring it up to that high, right? And then we start looking for that sell, right, up above, around what I would call kind of a hidden channel, right, as we break down. The key word though here is strength, right? Strength. It's going to feel like, not on the first one, right? The first one will feel very strong. The second one though is going to be the one that loses its steam, right? And then we can run back up. But again, if it continues here and then bam, right, what's going to happen is that push lower is basically going to be all the buyers who have been holding positions or trying to buy off this low. That's all of them getting stopped out, getting forced out, right? And the market runs lower. And remember, we don't want to sell at that point, right? If we do get that strength on through, find that new channel, and then wait for that sell up off that channel. It's the same thing to the upside, right? Stay away from the middle. One try, two try, wait for it, right, to fail, break out, pull back, and back down in, right? Or one try, two try, keeps going, right? Now we know, right? Now we know two try rule is successful, right? We'll find that hidden channel. We'll look to buy. Usually, right, this all lines up here with a buy zone there, and we'll look to be a buyer, right, on that pullback using that prior swing high, low of that new hidden channel, right? And we'll be off to the races, right, on that as well. So looking for a possible breakout, but until then, right, I'm going to use that two try rule to fade the edges, buy those lows, sell those highs, right, and avoid that middle. All right, let's keep rocking and rolling here. Over to the E-mini. The S&P is bullish with a spike in range pattern, telling me to look for buying opportunities using the two try rule down below the range tomorrow morning. And with a flag pattern, a bear channel coming down overhead, which can be used as an added bonus, right, or added benefit of support. Boy, a lot on this chart right now, but the most important thing is we have a very strong move up, right? I gave you guys that reversal line from yesterday. Boy, wasn't that the sweet spot, right? I told you I love those naked reversal lines. Very, very powerful stuff. So strong move, right? Strong move up. Right, and this strong move higher, what are we expecting, right? A pullback and a retest of the high, right? But what happened? Were we able to retest the high? We were not, right? We were not. And it looks like, right? It looks like this is starting to hold here as a bit of a top here at that, right? At that measured move. Now, right? If they fail to retest the high, right? What does that usually tell us? It usually tells us either the buyers don't want to buy high, right? They want to buy low, or the buyers could be done, right? They could be completely done with this, right? And the market will collapse. Doesn't look like the market's collapsing though, does it? Those big wicks up there tell us we've still got some hungry bulls in here, right? Looking to reload, right? Looking to reload the clip and go back up, right, to retest the high. So that failure to retest the high, strong move up, pull back, right? I'm going to use that to create a range. Mark up all of these little wick tests, right? Shave off the highs here, and that creates a trading range. Now, in all reality, you could say the trading range is a little bit higher, maybe a little bit lower here. I'm not going to argue about those small details. Just always remember this. It's always better to have a narrower channel or a narrower range. That's one of the good kind of rules or guidelines to follow. Anytime you're thinking about drawing a channel, narrower the better. Anytime you're thinking about drawing a range, narrower the better. Because what we're going to look for here is we're going to look for a buying opportunity with a target going back to the high of the range. I would rather right? I would rather assume that the high was a little bit lower than what it really is, right? I'd rather err on the side of caution. So whenever it comes to a range, I always tell my clients, if you're wondering what the right range high or range low is, go with the tighter scenario, right? Go the narrower of the scenario. So rather than trying to get my target back here, right, I'll put my final target up at that 05 half area, right? That way I know it's a lot more reliable target. Okay, so strong move up into a trading range. Okay, that's going to be the most important clue right now. We also have this flag pattern coming down, right? And you'll notice, right, we're trying to get some bounces off of it, right? And they just don't seem to be, right, manufacturing anything, right? They don't seem to be developing into anything special. And that's probably, again, because, right, we're seeing buyers really patient to wait down into that battle zone. So those are the two big issues here on the S&P chart. I want to go up, right? And I want, well, basically with this trading range, like any trading range, we talked about on oil here a second ago, right? I want to see that one try, two try, let those bears try to break down once, right? Let them try again, and then, right, we'll look for that failure going back up, right, into that range. Got a possible one try, two try here right now, right, into a failure, into a breakout pullback going higher, right? Use that trend line coming down for one, right? Then of course, right, the failure at the moving average, right? And then of course the pullback to the moving average. Remember though, it's obvious that the buyers are not interested in buying too high. So if you miss the chance to get in off the low, be very careful as the market goes higher here, because as you can see, right, this is a graveyard up here of buyers getting chopped up, right? So I wouldn't recommend making that mistake. So I want to see the market, because of a trading range here, I want to see it one try, two try. I'd love to see us dip down into this battle zone while using this trend line, right? That would be great. We haven't seen that yet, right? We got one example here earlier, right, off of that, right, late morning this morning. I would love to see us, if we could get a little bit of a dip, right, early morning tomorrow, right, down to that range. That will complete the one try, two try, right, and then again, use that flag pattern, right, use that flag, but now down in that battle zone, so we can really get everybody excited to be part of that opportunity here to go higher here. The hard part's going to be, remember on crude oil, we're balanced on oil, right? If we go up one try, two try, you can try selling off this high, but this is not a bear market. It's not a balanced market either. This is very much a bull market right now, right? So trying to sell up through that high, not a very advisable trade, right? So definitely lower probability if we're trying to sell off of that high. The other option would be a successful breakout pullback. What I'm going to look for though is I'm going to want to see this market get above this 08 half. I'm going to want to see a breakout, right? Breakout, and then if we can get that moving average to hold, right? If we can get that moving average up above, right? Up above that 28.08 half area, then we can get this party going to the upside, right? But as of right now, though, we really got to be careful, right, to make sure we buy too high right now. What you don't want to do is try buying a breakout pullback, right, into the top of this range, because it's probably going to kick back in your face, right, and collapse back down again, right? So again, if you want to be a little aggressive on this tomorrow, you can sell off that high, but make sure you remember though, if you're going to go counter trend to this stuff, you might want to use more like a half size position or maybe a third or a quarter size position, right? Use your full position size when you go in with the trend, and then use a very much smaller position size, right, going against that trend. How we break out of the downside? Yep, 1 try, 2 try, and run. Right? If we start seeing that second try start to run, right, the bears are undoubtedly going to be trying to retest, right, some of those lows here tomorrow. Another low down there, right, at 69 and a quarter here as well. So we got plenty of targets for those bears tomorrow, but they have to show us, right, 1 try, 2 try, and it's got to really run. If they can get us to run here, then we'll connect those, right? Connect those. We'll try to use some of this trend line here as resistance, right, and try to get that sell, right, up off that low, right? As I always mention in my nightly newsletter, we are not in the business of chasing after moves, right? If we see a big strong move to the upside or downside, wait for the pullback, right? Wait for the retracement, wait for that two-legged pullback, right? That short-term correction. That way you're selling at resistance, not selling at support. Right? In a bear market, sell at resistance. In a bull market, buy at support. It's a real simple rule that you'll notice, right? If you're not making money, you're probably breaking that really simple rule, right? I know when I was learning, I was consistently buying into resistance in a bull market, right? Just because the bull market doesn't mean we should buy it all times, right? We want to buy at support in a bull market, right? Sell at resistance in a bull market, in a bear market. All right, more to come on that tomorrow morning in the trade room. Got a good plan there on the S&P. How about the Nasdaq here? Nasdaq also very similar here, right? Very similar in the Nasdaq to the S&P here. Nasdaq is bullish with a spike in range pattern, telling me to look for buying opportunities down below the range low tomorrow morning with the goal of using that reversal line, right, which still hasn't been tested down at that 95.5, right, from yesterday. Boy, they tried really hard to get down to that 95.5 area. Right, I mentioned that last night on the newsletter, right? We had this bull channel waiting to be a buyer, right, off of the low of that bull channel, right? Even get a nice, right, two-legged pullback, right, to use along the way. So the problem is, right, get a strong move up. The buyers retested the high, but what we're seeing here at these highs, just like on oil, right, we're seeing rejection. We're not seeing the buyers actually get through those highs. And in a bull market, when the buyers are making higher highs, right, we'll keep buying pullbacks. In a bull market, though, when we are no longer making higher highs anymore, right, that's called a range, right? So we get a double top here, bottoms, mark up that range low, and this becomes pretty simple now. We still have that battle zone waiting down here. We still haven't tested it yet, right? We came very, very close to it. So that's usually that naked reversal, and that's usually going to be in play here, right, for tomorrow. So obviously the ideal scenario is 1 try, right, 1 try, 2 try, failure, right, pull back, coming back in, 1 try, 2 try, right, failure, breakout, pullback, try to buy as low as possible. There's a reason why this market is going sideways, right, at these highs. Buyers clearly don't want to buy high. If they did want to buy high, we wouldn't be going sideways right now, right? So make sure you focus on buying as low as possible here for tomorrow. And then unlike the S&P, we really don't have a lot of extra wiggle room up to new highs tomorrow, right? Get that 45 and 3/4 area. Now the S&P made it pretty easy, right? We had already pushed back to those highs before, right? On this one, though, we're going to have to really clear through that level of resistance, get that moving average up, and then we can start looking for, right, some buying opportunities here coming off of that prior level of resistance. So be patient if this market goes higher here through that high here, because we may just see a retest, 1 try, 2 try above that range, and this thing could dump right back down, right, into that range, right, as we try to retest that high from earlier on in the week. We know the buyers want to get back to that high. What will they do when they get there? Right, I'd like to go 1 try, 2 try, right, and then be a buyer coming back up into that range. That would be ideal. Right, again, 1 try, 2 try. If we fail at that high, again, you've got a chance to sell off this high, but just be careful, right? Again, it's not a bear market, it's not a sideways market, it's a bull bias, right, with a spike and range, right? So you be careful there trying to sell off that high tomorrow. And then, of course, also, too, right, if we want to see a strong break higher here, got to be careful, because what I don't want to do is breakout pullback, right, just buy right into, right, just because I clear outside the range doesn't mean I'm safe, right, back up at that high, because they could easily kick back in my face tomorrow, right, and run higher. I want to see it get up, get through it, get that moving average through, right, and then we can start thinking seriously about being a buyer. So the key word to the upside tomorrow is strength, right? Got to see some strength there. Got to really see some proof that these buyers, right, want to make something happen to the upside. Again, don't forget, we can easily turn bearish tomorrow. All we need is some strength, a pullback, and some strength on a follow through, right? That's all we need. Then we can connect those dots, right? Find that prior swing, right? Wait for that move up, right? And always look for that two-legged pullback with a hidden channel after that trend reversal, right? We've talked about that many times here this week, right, on this newsletter. So great example here on the Emini, Nasdaq, the S&P, and crude oil, right? All of them are very much range bound, but the Eminis, of course, they have that bull bias, right? So look for the buy side instead of the sell side until, of course, the sellers can take control. Let's keep rolling, right? From the E-minis over here to some very interesting charts. We'll go to gold now, and then we'll wrap up tonight on the euro. First things first, gold is bearish with a flag pattern and trying to retest those lows from earlier in January, right? That 1320.8. And I don't want to sell into the lows from earlier this morning, so my plan is to look for traps up in the battle zone to use the underbelly of this flag pattern tomorrow morning. Now, we talked about last night on the newsletter, we talked about, right, that strong spike down, and how we were probably going to see either a spike in channel today or a flag pattern today. And you can see we definitely, right, got that flag pattern, right? And you can tell, right, this is not a bull market, because if it was a bull market, we would have crushed this thing higher, right? If this thing turned bullish, it would have been like a vacuum, right? It would suck this price right back up, and we'd be so bullish right now, right? If this big spike had failed. So we know it's not a bull market because we never saw that strength pullback in strength, right? That's how you know, right? We're still bearish here right now. This is a typical flag pattern, and as I mentioned in last night's newsletter, one option is to get above the high, right? Get above that high and sell down from there. Well, that's obviously not going to happen, right? That's not the plan here for tomorrow. We're actually below that range right now, and so I'd like to try to use the underbelly of that channel, right, for my sell tomorrow. In all reality, really what I have to assume right now is, and again, this piggybacks on last night's newsletter, right? If you didn't watch last night's newsletter, I'll put a link up here right at the top of the video here to give you guys a link back to it, because I went through all of these scenarios and how to trade them from last night's newsletter. So follow that link up top of the page here right now, and go back and watch last night's newsletter. You can kind of piggyback on it right in tonight's newsletter. Bottom line though is, right? Bottom line is, when we break down, right, and we talked about this last night, right? Look left, right? You're right back at those lows now. I don't want to sell down here. This is the definition of selling low. We want to sell high at resistance, right? So where's resistance? Well, of course, we have resistance from this trend line here, right? We got resistance from this trend line here. We have a prior swing, right? So this area right there, right? That's kind of my sweet spot there. That's where I'd like to get either a trap high and back down, right? Or even better, right? A breakout pullback and back down. It may even be as simple as up, failure, breakout, pullback, right? And return back down to that low as well, right? Failure, breakout, pullback, right? And then of course the goal at that point, right, is to get right down to that, right, that bear target that we talked about again from last night's newsletter. All right, so we know the plan here right now. Again, it's a bear, right? It's a bear market, not a bull market. Resistance, resistance, resistance. I want price up, right? So we can sell it back down from that battle zone. What if price keeps going lower here? Right? What if it keep going lower here? You know, we always talk about what if price goes up, what if price goes down, right? What if price goes sideways? What if we go lower, right? What happens if we go lower here? If we go lower, right, not a lot changes. I still don't want to sell low, right? So if we end up going lower here right now, your job becomes pretty simple. traps. Anytime I find myself in a position where the only real option is to sell low, right? And this goes for anytime I'm getting down to the low of a channel like we are right now, anytime I run into a measured move, right? Anytime I'm getting uncomfortably close to a level of support or resistance, right? And I want to buy into resistance, right, or sell into support. I don't want to sell low, right? And so as we go lower here, I got to be careful not to get wrapped up in the emotions of it, right? Don't worry about missing out on the move. You just worry about staying patient and waiting for the little trap high, right, and then back down. We'll go from there. So that's the plan of price, right? If this price goes lower, let's see here. What else? If it really runs lower, then we may get a chance here, right, to use another kind of variation of, right, a hidden channel, right? We'll connect those lows, right? Could have used that to find some resistance there. So, if it really spikes down, right, we'll wait for that later on tomorrow morning. We don't have enough information yet on that, so we'll wait and see how that goes. How would we turn bullish right now? How would this turn bullish? First of all, anytime we look for a trend reversal, it's strength, right? Pullback, strength. In my mind, I've really got to get through this level of resistance there. If I can get that, then we're looking pretty good, right? In fact, I would be willing to bet, right, that if we see a market really jump up here, right, if it really jumps up here, it's probably going to spook the sellers, right? I want to see a trap high back down, right? I want to see a move up, failure, right, back down, right? But if we run, right, if we run here right now, it's probably going to be enough to spook those bears out, right? And you can safely start looking for those buying opportunities here. And again, strength, right? Strength, right? There's going to be a definite personality to this move, right? It'll feel like the sellers have completely walked away and the market will jump higher, right? Think about how strong this was going lower, right? When these bears realize they're wrong, right, they're going to get out and this market will jump, right? When it jumps like that, now we've got support, right? Support, and we'll look for that, right? Pull back down in, right, for that buy. Again though, don't try to predict that reversal, right? Buying here because you've got the top of that channel there, right? This could easily just kind of chop, and then dump right back down in. So be careful, right? Buying into that resistance, use that resistance as support, right? If you want to be a buyer tomorrow. So strong move up, right? Pulling back, and then of course, obviously we got targets back at these major swings for tomorrow. Could be a relatively eventful day tomorrow if these bulls can take control of this. Until then, though, right? Sell at resistance, right? Don't sell at support. Now, the $1 million question here is the euro. What a great chart. Well, I should say it's not a great looking chart, right? Because they weren't able to get this sell back down here to work after trying a couple times today. But it's a great chart for a new trader to learn from here today. It's kind of an ugly chart, as you can see. It's not that pretty, right? You wouldn't print this out and put it on, put it in the fridge at home. But it's definitely a great learning opportunity here, especially for new technical traders. So wrapping up tonight on the euro. Euro is bullish and trying to push through the high of this channel and back to retest the range highs from yesterday. But this short-term trading range is telling me that I can't buy into resistance, and I don't want to buy into the top of this following resistance. So I'm basically going to wait for buying opportunities either down below this little short-term trading range, or getting above it for a breakout pullback. Now this goes back to what I talked about again last night on that newsletter, which was we had, if we zoomed out a little bit, we had this strong bull run higher, and we had been kind of rotating inside of this trading range, right? So you kind of see where we are right now. This is easily just a failure, down below the low of that range. Okay, a little bit different look to it here would be on a much slower time frame. Here's a 30-minute chart, of that same euro. You can see it, strong move up. Now, what does this look like? This looks like the S&P and the Nasdaq that we saw earlier, doesn't it? Strong move up, pulls back, retests the high, Can't go through the high, so what does it do? Pulls back, buyers buy it again, goes back to the high. This is a trading range, right? And again, we talked about this last in the newsletter, right? And so we go below the range, right? We got one try, we got two tries, and now we're back up into that range now. So where should we likely go next? Back to the highs, right? So that's the play for tomorrow. All right. Now we also have this, again, you'll see in a second here, right? We got this kind of channel coming down here. And so we're dealing with this channel high here as well. Let's get that out of there now, right? Let's zoom back in. Okay, so I'm going to see where we are in the big picture now. You don't always need the big picture, but the big picture in this example, right, in this scenario really does help a lot. Okay, so if we extend out this range over, this will kind of give you an idea of, right, kind of where that range is, right? So where that range high is. Okay, so now we know, right? The buyers want to get back here, right? The buyers want to get back here. How do they get there though? Well, first we got to get through this falling resistance. Okay, that's one concern. That honestly shouldn't be that big of a deal, right? Because we're almost through it already, right? We can get through that pretty easily here. Okay, the big deal is we spent the day today going higher. We pulled back, made a new high, didn't go anywhere, pulled back, made it right, tried to make a new high, failed. What is that? That's a range. Do you see how this is just a smaller version, right? Smaller version of this. That's all it is, right? Here's a 30-minute chart, right? There's your spike in range, right? That 30-minute chart for your spike in range, right? As they always say, right? Markets are fractal, right? Markets are fractal. So let's use the same pattern that we have on the big picture euro and we have in the small picture euro. Let's trade them together, right? So I want to be buying on the way back up to the high, right? On the bigger picture chart, but now in the small picture, right? The entry time frame, we have our trading range. Same thing, right? One try, two try, and back down in. Okay, so that's pretty simple, right? It's pretty simple. As you can see, it took me a little while to explain it all, right? But you can see, big picture says we're coming off the low of the range. Just so happens we have a fractal, right? Markets are fractal, which means the same pattern that I find on a monthly chart will work on a daily chart, will work on an hourly chart, work on a minute chart, right? Second chart, et cetera, et cetera. Most of you guys and gals have probably already heard that before. Okay, so the key now is let's get below the range, right? Maybe down in that battle zone, right? The battle zone simply being a reversal line and a prior swing. You know, battle zone might be a little bit wider, right? Might be even a little bit wider like that, right? No big deal there. Just get it below it. One try, two try, right? And then back down in. One try, failure, right? And then back down in. That way, I'm not buying right at this resistance, and I'm not buying at the high of that range, right? That's the reason why you want to wait for a trap right now. Right? There's resistance there, there's resistance there, and anytime we have a situation where the only option is to buy into resistance, in other words, you're buying high, it's best to look for a trap, right? A trap pattern will work here, right? Failure pattern will work. Just buy away from that level of resistance. Now, you guys can probably finish the rest of this, right? We have resistance at the top of that range. How do we use that resistance to our advantage as buyers? Turn it into support. How do we do that? Get through it, strong move up. It'll take some strength. Remember, you don't want to buy here now, right? Don't chase that move higher because you got that bull target right there, right? Don't chase it. Wait for it now. Wait for it. Get the moving average up, right? And then look for that buy off of that level of what was resistance, right? That's the ideal scenario there if price, right? If price goes higher. Now, once we get back up to the high of that range, right, now we got to be careful again, right? One try, two try, back down in. Again, use a smaller, right? Use a smaller portion, right, of your position size if you want to choose to sell the market, right? Though, but again, you've got fractal patterns here, right? Long-term pattern, short-term pattern. You want to really be careful to sell off that high here. I would much rather be a buyer, but the problem is that there's not much space up here either, right? You have to get through it. Let's kind of fast forward a little bit, right? You have to get through it, right? Up through it, hold that pullback and go here. You really got to be careful, right? Being a buyer as low as possible because you get that bull target up there. So the euro is really, it's great if we can get in again off a little trap down here, right? Or if we can get in early here, right? But, you know, again, trying to be a buyer up here at these highs, right? Again, looking back at that 60-minute chart, right, it's going to be difficult to find some open space up there. That's one of those trades up there that it's not really worth our time, right? It's not worth our risk because there's not a big profit potential, right? I'd much rather be a buyer down here because now I got all that space for profit, right? Much better than trying to be a buyer up here, right? Not much space up there. All right. And remember, like I said last night, and like I say quite often in this nightly newsletter, it's all about thinking, where can I get into a position where everybody else is excited? Right? This takes some experience, I know, right? This definitely takes a little bit of experience to be able to put yourself in the shoes of the opposite side of the market. But you want to be thinking, how can I buy at support in a bull market or sell at resistance in a bear market so that my target can be 3 or 4 times larger than my stop loss? Because those scenarios are the ones that 9 times out of 10 are going to be successful because there's so many other traders that'll join you on that trade. And technical trading, day trading overall, is all about leveraging, right, the law of large numbers and the self-fulfilling prophecy. The more people involved, right, the better it will be for your trade. All right, guys. Speaking of the better will be for your trade, have you checked out our free trial yet? We got one of the greatest free trials in the business. I'm a little bit biased, obviously, right? But I think it's a great free trial. You'll learn all about our strategy here at School of Trade, the tricks that we use in our trade room. I'll shoot you a free pass. Come out and join the trade room as a guest. And of course, everything else in between, right, in that free trial. You're going to absolutely love that free trial. So make sure you join that. I'll put the links in the video description here on YouTube. And then don't forget, we got beginner, we got intermediate, and of course, right, the advanced classes here as well. Check out our beginner, intermediate, and advanced classes, right? If you are serious about your trading career, right, it's time to get serious about investing in your education. I'll tell you right now, very, very difficult to be a self-taught trader. I am simply standing on the shoulders of my mentors, right? Everybody needs a coach. I would love the opportunity, right, to be your coach as well, right? Give it a test drive at the free trial, grab the beginner, intermediate, and advanced classes, and don't forget, if you have any questions, I'm always here to help you guys out. Hit me up on live support on the right-hand side of the website. In the meantime, tomorrow's Friday, so enjoy the Friday, early in, early out. Have a great weekend. I don't do the newsletter on Friday afternoons. Right, I got a busy Friday schedule tomorrow afternoon. A bunch of new things we're working on here for our School of Trade clients. Speaking of School of Trade clients, I'll see you guys tomorrow morning, 8 o'clock Eastern time. If I don't see you there tomorrow, we'll come back and do it again next week, right? Next Monday evening will be the next nightly newsletter. You know where to reach me. Drop me a comment below the video here on YouTube, right? Check out the free trial and keep in touch. Guys, my name is Joseph. Thank you so much for being here this week. Great job this week. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.